Good morning, everybody. Welcome, welcome. You should be seeing my screen. You should be hearing me. Say hello. Let me know if that's the case. We're going to give it just a minute or two. Let people's audio come on. Good morning, Jeff. Good morning to you, Bob. Good morning, Michael. See if there's any new faces that I haven't said. No, Nick. Good morning, Nick. Good to see you. 40 degrees, bro. We're about the same, Bob. I'm 38 today. This morning. Good morning, Perry. All right, let's dive in. Everyone else will catch up. Welcome out to the Market Watch Group midweek check-in. Take a look at what's happened. Is it in line with what we were thinking was going to happen? How are we managing trades the way we said we would on Monday? Have you taken anything new? If so, what? Where? Why? We'll see what's setting up. We'll see if things are holding up the way that we expected. Had a great Trading Foundations session yesterday. That foundations course, or that foundation session, was focused on record keeping and the importance and some of the best practices, some of the mistakes to avoid. We'll talk about analytics on Thursday, so hopefully you can join us for that or catch up on the video. My name is Scott. Of course, if you are new, I hope you develop a comfort saying hello and saying hello and asking questions and making comments. It adds to the group. What is our disclaimers real quickly, and here's our agenda. So we'll look at the pre-market here, the opening, what the futures are doing. We'll look at what news is coming out. A lot of Fed speak this week, but not a lot of actual substance. We'll revisit our posture to see, is it holding up? Is it getting better, getting worse, staying the same? What's the follow through? Talk about our mindset for any open trades. I wouldn't be surprised if you had any lingering bulls that you were still just like, hey, moved a little higher, stay in it, moved a little higher. Yeah, I'm getting a little antsy. I'm getting a little antsy with anything that's left. It's been an extended run. The volume has dried up quite a bit. It's hard to vision the sellers pushing much more without taking a breath. If you're in any lingering bear trades, they're probably still biting you pretty good. We hate when we get into a hope mindset where we're like, oh, I need it to come back, and it just never seems to do what you would like it to do. Hence the reason why we really push hard for a strong management for them. Have a couple. Yep, understood. We'll go through our watch list and see, we have quite a few things that we said we would be interested in trading. The biggest question is it setting up yet? We're waiting. We're trying to be patient. Yes, we've had improvement in our posture, but our overall posture is still in the neutral zone. There's still some lingering concerns, of course. We'll see if there are any setups, and we'll talk about trading plan progress. This week, we've been focusing on your market posture section, where you really define all your routines, your implications, differentiating between market posture and trading posture, etc. All right, let's dive in. So here we are. It's Wednesday, and you can see what I mean, right? We've had 2 days where that was Friday. That was Friday, wasn't it? 11/3. Yes. What a great week last week was, right? Just like bam, 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 bam. And then on Monday, we had a little bit of a hanging man, type tombstone doji, maybe, if you want to put a little bit of a shadow on top of that body. But a pause, a harami. It didn't It didn't advance much. It was higher, but it didn't actually exceed the high of the previous day. Then yesterday we got just a little higher still, right? We went up just a little bit. What's the concern? Well, look down here. That's the concern. Now I don't need volume once the bulls take over. I need big surges in volume. That might be it. This might be our only surge. After this, it might just be that the selling volume dissipates and all we have left is a couple good buying days here or there, and that's all we get from the volume, possibly. Great, I'm fine with that. However, we are at or near resistance. That's empirical. Clearly, if you look just a little bit to the left here, relying on our concepts of recency and frequency to establish strength in support and resistance levels. So if I go back here, I can see that we played around this level here and also back here and also even back in this area. This has been a transitionary level here. So we're right at that level, at it. Now, in order to go through it, absolutely, I think we need volume. That's a different story that we're telling there. So would I need big buying volume to expect the buyers to be able to push through that prior resistance level? Sorry if I might have said support multiple times and confused you. If I did, that's my mistake. I support and resistance levels do have a tendency to flip-flop, right? Old support, new resistance. It was support prior, it was resistance here, and it's resistance now. It's bumping its head at resistance. If I said support, I apologize. It was terrible. We're at resistance, at or near resistance. What does that mean? It means that in order for us to break through it, we need to see buyers ramping up. Do we see that? No, they're not only ramping up, they're peeling off. Average 91 million yesterday. Sorry, Monday 67 million. So that's what 73% of average. Yesterday, average 90 million, we'll call it. Dropped a little bit. Average 64. Or yesterday's volume was 64. The buyers you can see it's pinching, it's rolling over. We're not really gaining any ground. Yeah. So if you are a highly speculative person and you still have, now we are still neutral. We're more in the bullish end of neutral, but we're still neutral. Does neutral open the door for bearish trades? 100% yes. Absolutely. Yeah. If you have some on, you're hoping that they come back, because if you have them on right now, that means they've probably gone against you. And that's the concern, right? If you're taking a bear trade and then the market shows a little extra oomph. So you might be in some bearish trades that you're thinking, I'm going to hang on to these a little longer to see if they recover. Then are you thinking of a new trade? Because we just had 7 days of buying. 8 days? 1, 2, 3, 4, 5, 6, 7 days. We went from this low, which was like the 6-month low. Look at that. Well, all the way back to the previous. I mean, we smashed right through this little blip and got all the way back up. A full V bottom recovery. Full V. Bam, bam. Pretty strong. Strong enough that we want to enter on day 8? Nope. Right? Nope. Of course not. What reward to risk are we thinking here? Where would you put your stop? Like down here? And then you're thinking that this is just going to move on up to here real quick? No, I think it's going to pull back. Maybe it finds some support in here. Maybe it comes all the way back to this support level and then go. At the very least, the flag, 2-3 days. This is more than it's done in literally a year now. Look back. You don't see anything that looks like this 7 days. It's already done more than it's done in an entire year. What would make us think to ask for more there, right? That's my thought. The question for me is, do I have anything bearish that I'm willing to speculate on to the downside? One or two things. Now the concern with that thought process is, don't distract yourself from the bigger picture. That's what I've seen happen to me and others. In a situation like this, they put a few too many bear trades on, and then all of a sudden, when it only pulls back a little bit, they're scrambling to manage these bearish trades that are starting to fall apart. And they're losing money on these bearish trades, and they're also missing the entry signal because they're so distracted managing those bad trades that they miss the actual window that they're looking for. I'm looking for a bull window. I'm looking for a pullback and a bull window. That's the bigger picture that I want. Right? The bigger picture that I'm looking for is bullish, but I need to wait for this consolidation first. I'm not going to just expect it to be bullish from here. So the question is, do I want to put something on that projects this to the downside? Bob said Vantage Point, which is a software, an AI type software is how it's marketed, projecting all four markets down. I mean, honestly, like it's on running on fumes. It feels like when you look at this volume. Could it keep going higher? Anything could happen. Is it what's likely to happen? Is there any reward to risk for me to the upside? No and no. So yeah, I might put on one trade, maybe two to the downside. Not enough though that I'm going to get distracted, because when we look at our watch list and you look at all these great stocks that we have that have broken consolidations, it's like, yeah, let's stick with the direction. Things are already starting to move, right? Okay. Jeff says, totally agree, holding to that bullish. Yep. All right. Did we look at everything? What time is it? Our pre-market's just about over. Our futures just crept positive here this morning, but barely. It's marginally 0.1% on the S&P, 0.13 on the Dow, 0.04 on the NASDAQ, 0.02 on the Russell. Oil down marginally. Gold down marginally. So it's kind of a flat day. Nothing's really doing very much. Michael said he had a trade on DKNG and gold. Okay, you are trading gold. Gold had some bullishness to it, man. Housing prices are due for a fall. Yeah, I mean, I could see that. Interesting what the reasoning why is because there's apparently 70% of like homes are owned by baby boomers. And there's going to be a large wave of downsizing, which will create that supply on the market due for a fall. And then that's the rationale. That could be over the course of a decade, right? So I have a hard time when you take information like that, that's sound reasoning to me, but what's the timeline for something like that? Right? Okay. What else? Mortgage rate plunges most. Stocks tread water with Fed's Powell. Jer Bear going to speak. I sent him a text, asked him what's on the agenda. He didn't reply, left me on red. It's kind of rude, if you ask me. Not much happening, right? We know that. Not much happening. Fed's Waller says jump in 10-year yields is an earthquake for the bond market. Okay. Not much. What's happening? Economic calendar. You can see we really haven't had much. Consumer credit is up. People spending more money on credit. Today, we're expecting a flat read from wholesale inventories. Tomorrow, a load number from jobless claims. We've got Jer Bear speaking, giving opening remarks. He's already going. Tomorrow he speaks. He's on the panel at the IMF. Friday, yeah. I mean, there's really nothing happening this week. We're just sort of meandering around, which is why I'm not surprised, or I'm a little surprised that we haven't seen the market do a little bit more of a pullback. Here is our current projection for the Fed for the last meeting of the year. We're we're 5 weeks away. It'll be on December the 13th, I believe. December, is that 5 weeks from now? 1, 2, 3, 4, 5. 13th. 13th. Right now it's 10-1 odds that they leave it alone and not raise it. Next week, however, we're going to get some CPI and PPI data. I got to say, for me, if they're stalled, if those numbers aren't dropping, the Fed has to hit it again. I think if next week we see these numbers not dropping, this CPI year over year, if we don't see those numbers come down, the Fed they have to hit it. I think they do. Anyway, that's my thought. Okay. Lastly, here we are. We're saying that we got we got this little pop. We missed a lot of this here. That's where we diverged. This cyclical path, for those of you who haven't seen this chart, this is a cyclical path, a cyclical representation of the last 20 years of the S&P. What does it do on average? So you can see where people get the 8 to 10% number from. On average, we go from 0 to about 9% over 20 years. You can see that it tends to go kind of flat the first 3 months, but there are pops that are tradable. March, April, great months. July tends to be good. October, November, December, but we didn't get a good October. October wasn't good. October was bad. However, are we able to regain the last piece of this? What do we tend to see here right around the 8th, 10th, 12th of November? Sideways consolidation followed by a little pullback, and then we get a bounce late November, early December, then a consolidation, then a nice little Santa rally. I'm open for this. This looks great. I wanted 3 bullish moves. Will I accept 2? Absolutely. 100% I will. What do I need, though? Need that consolidation. Okay, let's go take a peek at our opening range now that we're open. And look at that. We're already up 0.22. Right? Yep. So the 0.2%. So yeah, we're a little above what the futures were. What we're gonna watch, of course, is the follow through. Do we get follow? So yeah, we'll see what this opening range looks like as we go. What was on our agenda? What was on our agenda? Opening analysis, market. Oh yeah, let's look at it relative to our posture. We haven't had any above average volume, so our posture. Yeah, I mean, if you look at what's happening, posture looks the same. A lot of times by this point, we're like, oh yeah, it's already going to be worse. No, this looks like it's going to be the same. It's holding where it was. This looks like it's going to be the same. Volume. Volume might improve just based on the fact that old selling volume might drop off, and it might take us down to a minus 0.25. Major market, I don't think so, but that would be where I would say major market, maybe the VIX could see some improvement. Overall, we're really not seeing much happening. Look what we've had. We've had these 3 days. If we look at our weekly chart, what's it done this week? It's just kind of sitting there, right? A little bit of follow through, but it's just kind of sitting there. Let's take a look at the VIX real fast, and then we're going to go through our watch list. Still down. even now, I mean, you can see that we went from this real fast decline. 1, 2, 3, 4, 5. We dropped from 21% to 15%. An interesting thing can happen there if you're not careful. And some of you may have seen this in your trading. You may have seen where the market advanced pretty well and your trade didn't grow the way you thought it would. And you're like, gosh, my calls aren't making any money. What's going on? Or they're not making as much. Well, remember that delta is working for you when the market's, if you have a call, the market's going up. Delta is working for you, right? If you have a delta of 0.6, if the stock goes up $1, you get 60 cents increase in your contract. It's a pretty empirical number. And you're thinking, hey, I have a delta of 0.6 and the stock went up $2. I should have $1.20, maybe even $1.30, because delta goes from 0.6 to 0.7, right? Delta continues to get bigger. So why didn't I get that $1.30 on my options? My options only went up 60 cents. They didn't go up $1.30. Well, what happened is two things. Number one, time. If you're losing 6 cents a day and it took 4 days for that to happen, well, that's 24 cents of your $1.30 that you were expecting. So your $1.30 went down by 24 cents. Now it's $1.06. Then there's Vega. Vega is, how does your option respond to implied volatility? When you buy an option, you're Vega positive, which means you want volatility to go up. If it goes up, it will inflate and increase the value of your option. If implied volatility goes down, it will deflate or decrease the value of your option. So if you had here, the volatility went from 21.5 to 15. 6 points of volatility. So if you have 10 cents Vega, that means that the value of your option lost 60 cents. 10 cents for each 1% that implied volatility dropped. So now your $1.06 drops to 56. Delta helped you by $1.30. Theta hurt you by 24. Vega hurt you by 60. And this is what you end up with. That's what happens. What can we do about that? Well, if we sell options, then we change things. We change Vega positive to Vega negative. Now you can actually benefit when that volatility drops. And we change time from working against you to working for you. And so there are things that we can do. And we are actually exploring the prospect of a options class that we're going to finish our first pass at our foundations. What am I talking about? Vegas and car. Michael, I actually have some pretty sweet pictures of Vegas that I've used in options presentations before. What is Vega? Vega's not even Greek. Delta's Greek. Theta's Greek. Gamma's Greek. Vega is not a Greek. But hey, who's counting? All right. That's funny. Let's keep going. Great little option sidetrack there. I hope that's useful. I hope that illustrates to you options traders why we want to continue expanding our knowledge on options in order to incorporate spreads that allow us the ability to. I want all three. I want delta, theta, and Vega in my favor, or I want to understand that. I mean, like I told people yesterday, I buy cheap options. I buy cheap options simply because I'm expecting things to happen quickly. You know, if I'm only losing a little bit a day and I'm only going to be in the trade for 5 to 9 days, I'm fine with that. If I'm buying when the volatility is low, like now or even back in here, if you remember, if you were with me back in June and July, we were talking about how much we loved how cheap the options were. Look at those cheap options. Not only was the market bullish at this time, but the options were cheap at that time. That's what we're hoping for over here, is that the market gets more bullish, the options are cheap, and we're all over here trying to get a little fatter and a little happier. Okay, let's go through our watch list. Let me know if you have any follow-up questions to that discussion. But as an environment, I mean, look at this, man. It's a funky chart because it feels like it's meandering, but overall it's basically just stomping its way higher. Even now, it took out this high. Yeah. Those are times where I'm like, should I get better at trading those? But now that this happened, remember, this was one time. This was the biggest move. And so what I'm telling people is be glad you traded it at all. There are definitely people who missed it. We said, look, we're still neutral. We're still looking to trade at support levels. There are still plenty of opportunities throughout our watch list. I like Apple. I like Apple even better when it's not overbought like it was up in here. I want to see it pull back. Now, I don't want to see is Apple pull all the way back to lower lows. That is not what I want to see from Apple, right? And what I would like to see is Apple pull back down and stabilize and start to turn. That's it. Apple's definitely on my list. Adobe, look at that. Just still going. On my list. I want to trade it. AEO. AEO actually looks like it could be trying to bust a little flag right here. Let me tell you what I'm saying, what I mean. So we have a little bit of an upswing, and now with this consolidation, a candle like this looks like it's trying to pop out, and you can even see that it's trying to turn even here, right? Even right here, it's trying to turn, and it can do things like that where it can keep going even when it's a little bit overbought. So I'm starting to think, am I even going to be willing to jump into something along one of those? Plenty of time before earnings. Very bullish look to it. Aflac. Okay, that's what we're talking about right there. That's a nice little consolidation. At this point, I see that as a flag. I'm ready to trade this thing. As it pops up out of this, it's already starting to slow down. That's more than just to pique my interest. That's in a setup position. AIG looks very similar. You take your pick. Obviously, they're both insurance companies. PGR, probably the same. AMD, still grinding a little higher. We're just kind of waiting for our opportunity on these things. We're looking for a little bit of a pullback here. Amazon, same thing. God, at this point, look at that thing just running. APH, sideways, just doesn't have to be much. I'm just looking for small consolidations to start showing up. We're not seeing much. Here's Capital One Financial. This is pretty new. Credit, obviously, credit's got a big role in the economy, and this thing is setting up. This is the sellers taking control. When you look at these sellers, what do you think? Oh man, look how strong those sellers are. Look at those teeny little dojis where it's barely going down. Look at this volume that's dropping off. What does that tell us about the sellers? Running out of steam. Great. This thing's broken. It's ready to try to go back the other way. ConocoPhillips. I'm kind of down on oil and energy now. It's broken support levels. Great. Let's just relax. Let's keep watching it, but not really interested in trading it. Look at CPRT with the full 100% retracement back up. Now what? Still same as anything else, waiting for the pullback. CrowdStrike, waiting for the pullback. These all look great. I'm willing to trade any one of these, any number of them. As we get pullbacks, I'm going to have more bullish trades on. But I have to be patient. Look at CVE. That was a beautiful oil stock. At this point, I don't even see the point. Taking it off the list. Dell is new. Dell looks like it's ready to start a consolidation. This is what we're looking for. The question is, does the window start to open? How long does that window last? DHI, Home builders are still smashing profits. God, they're killing it. Killing it. Here's the diamonds. EA. EA is a communication services company looking for a consolidation. Everything is just a bit overextended right now. Very dangerous to trade into an overextended market like this. Very easy to get impatient. A lot of people start to get impatient. Look at Google finally moving into that gap. Here is GPS. This looks fantastic. This looks great. What a nice looking stock. Just waiting to see. Now, here's the deal. It could pull back a couple more days. We still have earnings going on out there, right? You still have earnings. So with earnings, you don't have much of a window left here, right? There's not much window left. So you have AEO. You could even look, we have XRT. That is a retail ETF. And you can see the retail ETF has that breakout, that pullback. It seems like retail. So if you don't like AEO and you feel like Gap is too close to earnings, you could probably find something you like better. IBM is new on the list. Like a lot of things, overextended. Just got to be paid. Look at small caps. I would trade small caps coming out of this. I think that they've done enough to show that there's interest, renewed interest on this pullback. When it fails, I would definitely be open to trading small caps via IWM. I don't go pick individual small caps. I'm going to trade IWM when that trade comes. There's Meta. Meta looks good again. There's Microsoft. Microsoft, Nvidia looks good, ready to go. All these stocks. NWSA. I would be really thinking about this one other than the fact that it has earnings tomorrow. So I'm going to keep watching this. But it broke out of the consolidation, moved up. Now it's pulling back, and we're thinking that's like a lot of these creating our opportunity. This gave an opportunity back here. It just hasn't moved much yet. PGR. PGR. No, I don't. I like Aflac and AIG. I don't like PGR. It's a little more sideways, right? You can kind of see it. Just it doesn't have as much oomph as the other two. Okay, so I definitely think that AFL and AIG are setting up early. I think that retail stocks are setting up early. We're starting to see these setups. Little bit of consolidation developing in technology as well. You can see like here, it's starting. It's not much, which is great. We're not looking for the sellers to smash this thing back to 14. I'd like to see this not drop below this level here. Pull back, holds up somewhere around like maybe 1680 up to 1750, somewhere in this zone. If it can hold up in there, high or low, ready, love it. Ready to go. Let's see, what was that? That was PLTR. QQQ looks strong. Everything here is looking. We added some travel stocks. You could add airlines. I don't think we put the airlines on. I need to throw a couple on. We added airlines and a cruise ship. They're looking like they're showing strength again. Starbucks, strength again. Shopify. All of them look stronger. We have strength in technology, strength in communication services, strength in consumer discretionary, strength in retail, especially strength in industrials, strength in financials, particularly led by credit and insurance. That's broad. That feels pretty good, doesn't it? It feels pretty good to me. Feels like it's a broad-based rally. There's plenty of strength here. The institutions, you look at the VIX, the institutions look quite confident. Any fears that were building, they seem to have shed them. So yeah, my general synopsis is everything looks better. I'm patient, trying to be patient, waiting for these things to consolidate. I don't want to trade at the end of day 8, right? Yeah, Tesla does not look good yet to me. I was looking at Upstart and I was thinking if this thing can hold up, you can see what kind of potential it has back here to the left. That was a big if. How did that if turn out? Not great. They were expecting to lose 44 cents a share. They only lost 5 cents a share. But something was underreported for their guidance because this thing is down 25%. And therefore it is off of our list. It's that easy. Here's the VIX continuing to grind down. We're back in the 14s. We haven't been in the 14s since back here when things started to escalate prior to September really getting a little bit ugly. Here is Williams Company is one of the only energy companies that's holding up and still looks pretty strong. That actually looks like it's setting up for a trade right there. We've got a new high. Earnings went well. High or low, that's a possibility. Walmart made a nice move back here, but it's overextended. It's starting to consolidate, and you are creeping up on earnings. There's still another week or week and a half that you have to be, mindful of these earnings announcements for sure. Let's take a quick look at some of our ETFs. You can see energy is down. Financials is holding up, looks pretty strong. Industrials holding up, looks pretty strong. There's a little bit of strength in staples. Look at utilities. Utilities is giving it back pretty fast. That defensiveness doesn't seem to be holding up. Our market posture, our sector rotation is already at a 0.5, so we've already scored it pretty good. So I don't think it's going to impact much, but I think it's confirmation of that. So what do we know? It's just a little slow in figuring out what's next. We've pushed a couple of days higher. There was no volume to it. We're in the same spot we were. We're trying to be patient. It does look like there are things setting up. Remember that when a trade window comes, it's likely to be 3-4 days. Here we have insurers starting. We have a couple of credit card companies starting. We have a couple of technology companies starting. Some other things haven't even started yet. So there should be plenty of trading for us when that time comes. Okay, what's next? Make sure you are getting section 2 worked on. Write these down the way you understand it. You might change them later, but write them down the way you understand it. What is the best way to keep track of the watch list? Fabulous question, Lionel. So 2 things. I just updated this. So you can come in here into the welcome doc. Remember that the link for this is in the emails, and you can scroll down and you can see here's the current watch list. So if you don't have the current one, you can grab it. Then I like the Thinkorswim, which I use, is the way that I manage the watch list, which allows me to toggle through it very quickly. I want to toggle through a watch list. I don't like clicking. I like popping on my keyboard, pop, 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 hitting the down arrow, taking a look. And you can have multiple watch lists. So I would say look on your broker site and find the different ways that they allow you to organize watch lists with charts. That's what I want, right? I want to be able to look at my watch list by scanning through the charts, and then being able to take action there in the platform. So I would say best way to keep track of it is in your broker's page. Try to there's usually different mechanisms they have that allow you to track a portfolio or whatever. Best case scenario is to align your watch list with your charts so that you can move through your watch list and be toggling through charts. That's our window into what a stock is doing. So hopefully that makes sense. But if you look at this here, open preview. I updated this on November the 6th. So that's brand new, except I just deleted, right? I just deleted CVE. All right, yeah, you're gone. CVE's off the list. Okay, CVE. Oh, that's just a preview. Son of a gun. I was gonna edit it right now. Nope, I'm not going to. My pleasure. Good question. I'm putting your list vantage point. Okay, very cool. Very cool. Yeah, so make sure you're writing a little bit down about what market posture means to me, what trading posture means to me. How are you going to not to me, but to you? How do you make some of these determinations based on that, and then really start thinking about your hedging. I have a number of things that will trigger hedges for me. So awesome. Okay, pretty good. I think we're in the same place. We're still in a good place. I'm still optimistic. We'll see how this market finishes when we meet on Friday in the afternoon to close things down. We will meet tomorrow night to talk about analytics. What are the analytics you should be running on your trading to really start to identify, where can I make things better? Have a great rest of your day. It's good to see everybody. And as always, happy trading.